What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is June 29th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to take a broader look at the crypto space and talk about the recent correction we had and the massive rally that we've had throughout 2019, and also talk about why I'm not waiting too long in order to add extra positions. So I want to really kind of emphasize that as we go throughout the video, and I'll use some of the data to back that up. Alrighty, so let's go ahead and take a look at the broader market. Over the last 24 hours, most cryptocurrencies that are making significant moves are in the green at the moment. You can see we do have an awash of green. We also have a decent amount of cryptos in neutral territory and a few players here down here in the red, such as Tezos, MadeSafeCoin, and Lisk. Now, the major thing that I want to talk about is there's really two players that are still standing out. Chainlink, the legend itself, the living meme, has hit $1 billion market cap as it's trading on Coinbase. Now, in all seriousness, guys, I know Chainlink is kind of seen as a joke in a lot of people's eyes, but it's not only been listed on a lot of major exchanges like Binance. Along with that as well, Chainlink is fixing a very, very important issue on a technical side, which is the Oracle issue, trying to actually connect to trustworthy data sources and being able to actually make blockchain useful. All those analogies of using smart contracts for, enterprise solutions or for gambling or for anything that requires to, for you and I to, in a trustless nature, be able to pull data on something in order to send Ethereum to one address to confirm something's been done, right? That's kind of important. That's what Chainlink does. So just wanted to mention, I think it's amazing to see that this thing has hit $1 billion market cap. There just really hasn't been many cryptos that have moved like it. And I don't hold any Chainlink personally, but I just wanted to say for all of you out there who are the Link Marines, holding on tight, I'm very, very proud of you all. Okay. And then also as well, just to toss it out there, guys, if you haven't already, I'm just saying I think that the slots are getting a little bit small for round 2. I think it's closing in. If you guys haven't claimed your energy yet, not only make sure to check it out, but make sure to do the KYC and everything, because there is a limited amount of slots. And this is one of the bigger airdrops that is out there in the cryptocurrency space. Demand is really ramping up for it. So I've got a link down below where you guys can go to that and do the airdrop or the airdrop campaign. Now, let's go ahead and take a look at the broader market over the last quarter. Again, we have ramped up heavily in crypto markets. Even with the correction, we've practically doubled our market valuation from down here at the lows. Again, continuing to strip up towards higher levels and really not closing down too many gains here. We're really just down about $30 billion here in the sense of valuation, about a 10% correction from the highs. We've been able to recover a lot over the last few hours as Bitcoin has rebounded. And as we can see here, I wanted to get a certain selection here of market dominance. We're not taking a look at the max chart. We're actually taking a look from here at around April 9th of 2017 here to where we are today in June of 2019. And I want to emphasize the pattern we saw here before the altcoin cycle, where altcoins really started to take off. And that was a slightly higher peak here in Bitcoin dominance with a sharp turnover, right, where we started to turn the trend very quickly. And I think that's what we're seeing right here, guys. The slow build up towards setting a high in Bitcoin dominance, and then again, a higher level here and then breaking down. I think that's exactly what we're seeing here. And we also as well had a for example, a lower high here over here and then over here as well. So again, I think it's just being more extended here. And then the momentum is really kicking in here in the sense of Bitcoin, as we've seen in this rally. So I'm interested to see what's going to happen over the next few days. But I think that we got to push towards 65-66% dominance, and then we'll be able to move much higher in the sense of altcoins, because at that point altcoins are going to be going from a percentage range at their peak around 23 and 24% downward towards around 12 to 11%, and that's going to put us at the range where we were back here during December, right before we had the crazy run up in altcoins into January. Okay, so let's go ahead and take a look at the price of the market, guys. Now, I want to let you all know the chart's a little bit scaled. I've scaled it. I've drawn it out here in the sense of price, so it's a little more vertical in the sense of the chart. It's not really going as parabolic as it looks. But the reason I want to do this is because I have a lot of percentage and date boxes here that are going to show us basically the range in the sense of price and the time frame as well it took for that price to move in that direction. So my major point that I want to drive home here, guys, as I mentioned and hinted towards the end of the beginning of the video, is that in this market I am not waiting around that much. Okay, now I do believe, as much as the next guy, that this market probably needs to see a 35-40% correction. I'm not even talking about 30%. We need to see a 35 to 40% correction. Be really, really healthy for this market. But you know what? As much as I'm saying that, Bitcoin doesn't have to do that. It really doesn't, guys. Again, we've talked about a lot of the data in the sense of the relevant things we need to factor in. The unspent transaction output ages over time are expanding. As you can see here, we're getting a dip off here on the 5-year. Even more Bitcoin are being hodled. Again, you're seeing an expansion on a lot of these other time frames, the 18 to 24 month, down here as well. The yellow mark here, 6 to 12 month. You're starting to get a lot more Bitcoin stacking up, and it doesn't look like people are looking to sell anytime soon until we're well beyond 20,000 and into the next cycle. And then also NVT, this is something that I want to talk about here before we dive back into price to really kind of solidify the point here. And that is that with NVT, we've been talking about NVT being overextended, and this should be a sign that price is correct, right? Well, at the end of the day, not only do we have room here to continue visiting higher, we've seen that we've been at higher levels back here in 2013 in the past. And this is, again, when Bitcoin was going through very, monumental movement in a very short period of time, where Bitcoin was moving from $12, here at the base here, for example, entering into 2013, all the way up to its peak, right at around 1100. So if we're considering that into mind, if we're moving anywhere close in the sense of that momentum, I don't think we're doing 100x, but, again, if we're moving up at some very parabolic rate like we have been, we could very well hold in this range for some time, even if we're doing a 10 to 20x here, because we're scaling a much larger market. And this is comparative to the volume on the Bitcoin network. So if we can't scale that, if it's not being used as a merchant payment solution, right, as some people desire it to be, it might be that as we see NVT move higher, this is actually proving that there's more demand for Bitcoin in this case. That I know, ironically enough, that the indicator is supposed to prove that, hey, Bitcoin's value is fundamentally overvalued comparative to what it's providing on the network, but maybe its transaction volume is not so much what's going to determine Bitcoin's network value. The fact that there's demand and the fact that there is an oversized pressure in this case on the demand side comparative to the supply side to hold Bitcoin means that this has a justification for its price. So you know what I'm saying? Like, I'm kind of wording it weird, guys. I hope I'm getting my point across. It might be that NVT as an indicator is going to be proven to not be that valuable anymore. That it might turn out that this is actually a very positive indicator for Bitcoin, that people are not transacting over the network, they're holding their Bitcoin. You see what I'm saying? So I hope that makes decent sense. But similar to the UTX, basically the unspent transaction output model in this case, we have more people holding in this case. It doesn't make good for a merchant payment solution to see that. It makes good for the store value argument that people are holding, and that, yes, you can sell it. You can sell it if you'd like and, cash out to other assets, but that's the major point here. People aren't doing that. And we see with the corrections here that they're getting shorter and shorter on a, roughly speaking, maybe on a day-to-day basis, it might be a little bit longer, but we're seeing the corrections are roughly around the same mark. The worst we just saw was the other day at 24%, and that was after a crazy parabolic run up in a very short period of time. As I was watching Crypto Daily's point on this. Cam from Crypto Daily's awesome guy. He was mentioning that this was just for a very short period of time that we had this sharp correction. It was in one day where we set these lows down here, and now we're already rebounding back to 12,000 on Bitcoin. And we got 18 and 17, really roughly around 18% corrections back here. So it's showing that people are buying up these dips, not waiting for 35 to 40% correction, as much as we like that. They're buying, much shorter correction periods and stuff. When you get a nice double-digit pullback in Bitcoin, that seems to be the time when you can average in, when you can start to, build up your position. And that's my major point here, guys, is to not try to trade these markets. I'm not going to give you any financial advice, but boy, if I could just share my personal thoughts, I'm not trading this market, guys. Plain and simple. Now, another thing I want to take a look at here, if we can load the chart here, I'm going to go ahead and pull up Ethereum, and it's the exact same case here in the sense of price range, guys. There we go. We got the price data here. Again, I'm going to scale the chart here just so we can read all of the price boxes. So we can see here, 25% correction, 22% correction, a 24% correction, very short period of time, 23% correction, 24% correction, very similar pullback ranges. And every time buyers are coming in and price is going higher. That's my big point I want to drive here, is that we don't want to wait for the broader trend, guys, to get a price that's slightly better here. Because the fact of the matter is if you're along for the ride, if you've got your position and Ethereum goes to, 10K this time around, we don't want to be on the sideline saying, oh, I didn't buy it because I was waiting for it to go to 145, right? You know, in the grand scheme of things, all this is relevant. It's irrelevant in the sense, if I buy it here at 270 or I buy it down here at $220, if I'm gonna make a 50x multiple in the next year or two, I shouldn't care about that. Now, I'm not saying Ethereum's going to do that. I'm just saying, again, you know, even a 10x multiple, it's still irrelevant. There's no other asset class that's going to perform like that this year outside of cryptocurrencies. So that's what we have to keep in mind, you know, at least any major asset class. So I'd like to know what you all think about this down below in the description. Again, you guys know I don't like to overanalyze markets. I don't like to look at too many indicators. I look at when buyers are coming in. I look at price levels. Prices don't lie. You can see it's very transparent that in a matter of a week of a correction, if not 2 weeks, that you're going to get buyers coming in and they're going to be buying around the same range because they're looking. Professional traders look at these ranges here. They don't look at a dozen different indicators. They look when there's corrective periods in markets. They look when they can average in, and they look for the longer term trend. Professional traders are not day trading this market. They are buying in, they're riding the cycle, and they're knowing that they're going through the rising accumulation period in order to trade for the longer term cycle. When we break past 20,000 and we start to break towards much higher levels, you guys know my target range for this time around. I think it's going to be 60 to 70K at a minimum. And I know my numbers are much more conservative than others, but I'd like to know what you all think down below in the comments. What do you all think about this crazy market and this crazy upside action? Do you think we need to get that full 35 to 40% correction before we can really move higher? I'd like to know what you think down below in the comments. I'd like to see it, but who knows, guys? This market is moving at a very, very crazy rate. It's exciting times for crypto, but I hope you all are having a fantastic day wherever you are. And until the next one, I will see you all in the next one. Stay tuned.